at the end of the year 2013 donated ice to the neighboring school, that the total cost of the ice is 10,000. Although the ice would have been sold to the public for 25,000, this is the one that they are asking you what you're going to do with the donated stock. And we study from stock in trade that if the stocks are donated, it is actually withdrawn for own use. And when the stocks are withdrawn for own use, you will have to tax it as though you sell at market value, which is 25k. Now, at the same time, the 10,000 will still be recognized as a cost. That means effectively they are only taxing the profit. Okay. Now, they also donated a used delivery van to the school for the disabled on the 1st December 2013. The market value of the van on that day was 38,000, while the residual expenditure and the net book value is 35. Now, why are they telling you all that? I mean, you would have guessed that this has something to do with capital allowances, because they gave word like market value and RE. I mean, what else can it be if it's not capital allowances, right? So you would have guessed that this is to do with CA. So when your assets are being donated, that means you have ceased to use the asset, right? And once you have ceased to use the asset, what happened is you are disposing the asset, and the disposal took place in Y 2013. And you know that in Y 2013, when you dispose the asset, you have to compute the BA and BC. So questions is the formula for BA BC will start from disposal value minus the RE. You do have the RE. The questions is what is your disposal value? Now then you would explain. You donate this van, you're not going to sell for it, you're not going to sell it, so there's actually no proceeds. So it's zero. But the formula for disposal value is the higher of the proceeds or the market value. So by comparing 0 and 38, you're going to use 38. You see, I'm actually giving you the answer. You know, as I read now, I'm giving you the answer. But the only difference is you have to write it. So you have to say all that in the point, okay? Now, so when I know the disposal value is 38, I minus the RE, which is 35, immediately I can see that there is a balancing charge. Okay? It's actually quite easy, huh? Now, 45,000, which is the 10,000 and the 35,000 was charged to the profit statement as donation. So I will have to tell them that in the tax com, what you're going to do, the 35,000 will obviously be added back. It's a capital adjustment. It's a capital cost. You know, we don't have any gain on disposal or loss on disposal. The 10,000 is fine because the 10,000 will still be accepted as a cost since we tax the revenue, okay? But later, will you be able to claim anything for donation? Of course, no, because the donation is only claimable if it's approved. That's why you learn under section 44.6, you must make a donation to an approved institution and it got to be in cash. So you gotta give an advice like that. This is exactly the same thing how you give advice in real life, right? Imagine if there's a client who tell me, hey, I gave one van to the school, cannot claim. I do very good thing, you know, to the school. Then you got to explain to the guy, cannot. How do you explain? You cannot just say, cannot. Why cannot? Cannot. Why you ask so much? You cannot say like that, man. You got to tell the fella, because the law say, right, donation must be cash. Must be approved institution. So unfortunately, you donated as kind, so you won't qualify. So sorry about that. You won't be able to get deduction for your donation. Now, I think that itself would have helped us to answer part A.